Good morning.
So questions about growth here. The street went from doubting Stitch Fix. I remember sitting down with you at the IPO almost 11 months ago, around $16 a share, to getting really excited about growth prospects. How much of an impact did it really have when you shut off TV advertising during the quarter? Do you think you would have hit the street's expectations if not for those tweaks to data that you were doing?
So, to be clear, our revenue this quarter was on the high end of the guidance that we shared. And to your point on earnings and EPS, those were both above the expectations. We delivered 25% year-over-year growth on the client perspective. For the full year, we delivered over 25% year-over-year growth on the year. And that's exactly what we committed to. When I was sitting here with you about a year ago, actually, at the IPO, when the stock went at $15, we talked about a year-over-year growth rate in the range of 20 to 25% and doing that profitably, and that's exactly what we delivered.
So I guess you're saying this is a case of the street perhaps getting ahead of itself versus your expectations that you had set. I wonder how you're approaching holiday, because Stitch Fix, it is apparel, which is a big category, but the model is different. It's more about the individual picking what they want. How much of a gifting effect should we expect, and are you changing anything ahead of the holiday season or enhancing anything to put some gas behind that perhaps?
Yeah, if you look at our kind of annual patterns, holiday just is not the kind of huge revenue ad that a lot of retail sees. A lot of retail really heavily depends on holiday to make their year, and that's just not true about our model. To your point exactly, because Stitch Fix is so much about the personalization for oneself rather than the gifting element. Gift cards are a part of the business. However, we see a lot of that redemption happen in the new year, in January, February, and so I think kind of the past years and the quarterly flows of past years are probably the best way to see what the expectations are. But for us, we don't have a big play during holiday, and for us, I think we'll expect a similar pattern to what we've seen in years past.
I want to ask you about international expansion. You guys had announced that you're heading over to the UK. You talk about the components that are necessary to put in place, the things that you have to measure, the amount of time that investors should expect before they start to see that market mature the way that some of your other markets have, not just geographical, but heading into men's, and you started into kids. What are the things that you need to put into place in the UK?
Yeah, we're super excited about heading into the UK, and to your point, I think what we've been able to see in men's has given us a lot of confidence as we think about a new client base and a new set of inventory. With men's, we are now coming up on 2 years of anniversarying men's, and now that business is in a place where it's more mature and it's contributing more to the business, you can actually see in our gross margin, we had the highest gross margin that we had this quarter that we've had in the last 6 quarters, and so you can really see how those businesses mature. And to add kids, and then now to add the UK, we're really excited about planting those seeds. I think with the UK, it is so important in the business of personalization, which ours is, to understand each client and understand what each client is looking for. And so there's a lot of investment in localization, of localizing stylists, of bringing merchants who understand the market and are buying from brands that our clients in the UK will expect. And so all of that localization, it definitely requires a little bit more work, but we think really sets us up for greater success.
Katrina, this is Courtney Reagan. I understand that personalization also helps you drive that annual revenue per client higher. It was up 3% quarter over quarter, at least, to $447. So is that an area where Stitch Fix can continue to expand? Say maybe the street's very focused on the user growth of slowing somewhat, but is this annual revenue per client an area that personalization can help drive even higher? And if so, how much higher?
Oh, absolutely. We're really excited about seeing revenue per client higher. What that really means is it means that we have clients who are spending more with us, clients that are high quality clients, and that's definitely an element of the business we're really excited about. And right now is a great time to be able to see that, because men's is getting to a place where we see greater maturity in that business, and kids, our newest business, has not kind of blended into those client numbers yet. And so internally, I would say, figuring out how we can capture more wallet share, how we can make sure that we're getting clients more of what they love and capturing more of that revenue per client. That's a really big area of effort for us, and certainly an element that we're really excited about with the business right now.
Katrina, can you talk more about customer acquisition? I thought it was interesting on the call. You guys talked about how TV did prove to be an important channel for you guys. And you seem to imply not just to get people aware of the brand, but it also interacts with other channels that you guys use to sort of activate consumers. How is the runway for customer acquisition maturing as people become more aware of the brand? And are there other secular trends that are influencing how quickly people sign up?
Yeah, I think we're still even early in the journey. We've learned a lot in the last couple of years on the marketing front. We've brought channels in-house. We have a lot of efforts around diversifying our channels. In TV, so in the last quarter, we had TV offer about 10 of the 13 weeks, national TV offer 10 of the 13 weeks, which really helped us to understand kind of regional impacts and really understand the how much TV is adding directly, but also to your point, helping our other channels. And we already knew that TV was an important part of the mix, but this really validated a lot of those learnings and definitely helps us to plan in a more accurate way going forward. That being said, I think even on the TV front, there's still a lot of opportunity as we think about diversification and different tactics. What we haven't done a lot of today, or actually we haven't done any of today, is brand marketing. And we have a CMO who's been in the role for 3 or 4 months, and I think as we are able to hone that marketing muscle and learn more about what's working and not working, brand marketing is actually going to be another tactic I think that will be really helpful, not just activating and generating awareness, but also driving more re-engagement and driving retention. And so, I think we're partway on the journey on the marketing front, but that we're still really early. There's still a lot of addressable market out there. Our awareness, particularly on the aided side, or unaided side, is really, really low. And so, we're really excited about how much more opportunity there is on the marketing front.
Katrina, it's Carl. A little curious how you think of some macro issues we've talked about. Labor cost, Amazon's a big story today, but oil, transportation costs, cost of goods in the face of tariffs. Just in general, is there a sense within your company or others that you know that you're bracing for 19 from a cost standpoint?
We're certainly, on the wage side, we've always been it's been part of our culture to make sure that we're paying in competitive wages, to make sure that that we are really close to what's going on in the market side, and really proud of what we've done. The tariff side, we're watching just like everybody else. I think the most recent round of tariffs really don't affect us, don't affect the categories that we sell. But at the same time, we know these things are a very quick evolution, and so we're definitely staying really close with our partners to really understand what impacts could have on our business. Overall, in our business, we've actually seen more leverage on the cost side in the last year or so, and so we're optimistic that that can continue, but of course are always keeping our eye on the macroeconomic events.
Katrina, I want to talk about expectations. Of course, the stock is reflecting today one sort of mismatch in expectations, but a lot of investors are affected by the Amazon effect. Every time Amazon says it's moving deeper into a category, lately there seems to be a stock reaction. Amazon's got Scout. They're trying to get more into this personalization area. They could get even more into fashion. So my question for you is, what are the metrics, perhaps the data, the evidence that you think that people should watch to truly gauge whether Amazon or Stitch Fix or any other company is really having success in this market you're operating in?
Yeah, in apparel, there's a really wide range of categories. And so, firstly, apparel is a almost $400 billion market where nobody, not even Amazon, has more than single-digit market share. So Amazon has 8% market share in this category. And there are categories within apparel where cheapest and fastest is really what the value proposition is. The really hard, meaty part about apparel is trying to figure out what are the jeans that are going to fit me great, what's going to be the dress that's right for this occasion. And that discovery element is something that we really excel at, and that we really don't see anybody else approaching it at all, frankly, and certainly not in a way that really combines data science and humans in the way that we do. And so, we really look at, what are the categories where we're successful at, what are the categories where others are successful at, what are the brands that you see in the other categories, and we're a really strong place where brands love to work with us, where we're really able to help people solve the really hard part of apparel, which is really finding those clothes that they love and not necessarily the ones that are functional and cheap.
All right, Katrina Lake, founder and CEO of Stich Fix, and the day after earnings, stock taking a bit of a beating, but the strategy seems to be the same. Katrina, thanks for joining us.